make it clear to us that this is going to be an interactive session. So feel free to drop your questions in the Q&A section of this. If you look at the bottom side of the your screen, you will see Q&A. Drop your questions there, and we will make every effort to respond to those questions at the end of the presentation. Thank you very much. Pay attention as I hand over to Obioma to take us through. Thank you.
Okay. Thank you very much, sir. I will be turning off my video now because of connectivity issues. So thank you again. COVID-19 has significantly impacted businesses and the economy. And of course, we in the audit profession were not left out. So our session today, we're going to explore the ways in which the audit profession is impacted by COVID-19 and some of the considerations that we as auditors should be making at this time. You know, the auditor still has to, despite whatever challenges there can be or there is at this time, you must still obtain sufficient, appropriate audit evidence to support the opinion on the financial statements. So the next slide, can the slide move down? FRC Nigeria issued a COVID-19 guidance document in April. And that guidance document provided guidance as to who and which audit financial statement audits are impacted by the COVID-19. Next slide, please. Completed audits for periods ending 31st December 2019, where reports have been issued, are not affected by the impact of COVID-19. For ongoing audits and certain financial statement audits for 2019 were yet to be concluded at the time this COVID became an issue. So there are certain considerations that will be they're affected, and there are certain considerations that require to be made. And those are with regard to the adequacy of the disclosures of the impact of COVID-19 and the financial effect from that impact. And for audits that commenced, for 2020, that's periods ending after January 2020, after 1 January 2020, the full effect of COVID-19 should be apparent and come through the financial statements. Next slide. So what are the audit considerations? It starts from the very beginning. And I'll just move quickly to the next slide so as not to take too much time. Right from engagement acceptance. So what you, as an auditor who is engaged to audit a financial statement, perhaps it's a new auditor, you've just come in, you've just accepted the audit, or you are an existing auditor. And you certainly have to ask yourself, what are the information requirements? What are your client's circumstances? How can you actually execute this audit? Are you able to get all of the information that you need? If, for instance, the client says to you, my premises are not open because of COVID-19 considerations, how do you deal with that? Can you conduct your audit remotely? Or you're not able to, say, visit the site of the predecessor auditor for a new audit engagement? How then do you do the work? What if the predecessor auditor is not able to accept you on site and you're not able to access their data electronically? Or they're able to share data electronically, but you as an auditor, you do not have the means, the digital support in order to audit online or offline. So the next area is actually as you plan your audit and you're planning to rely on certain controls. So you must ask yourself, how can you even test these controls? Can you perform walkthroughs? Are the controls still working? Are there new controls that have come into place as a result of COVID-19 that you need to be aware of? How do you test them? What about what alternative procedures can you perform? And is there a heightened fraud risk as a result of, for instance, these new protocols that have been put in place to enable the business operate offline, that's, to enable the personnel or the companies to work from home, for instance? Does it create fraud risks? What are the control checks that management has put in place, and how can you rely on those? Again, with materiality, you need to look at materiality. How have you considered the materiality of the disclosures and the absence of these? So at a time like this, the numbers may change. If your base for materiality is revenues, revenues may have changed as a result of the impact of COVID in 2020. So how do you then, what's your base for materiality? What is going to be? How have you considered that change in determining your materiality? Then in terms of evidence gathering, you need to consider how you gather evidence and how, for instance, restrictions on movement then affect you as the auditor. So all our original source documents, how do you get them? How do you get the physical evidence that you need? Look at inventories. How do you attend a stock take virtually? Or what are your workaround? What are your procedures to sort of make sure that the inventory is okay? And you remember, inventory isn't just about the number, it's also about the condition of the inventory. So are they able to do a live streaming, for instance, of the stock take exercise? So I need to consider what if it requires measurements? How does all this impact your opinion? The next slide. If we look at the judgmental estimates, such as provisions, and we are supposed to consider fraud risk significantly at this time. So this is an area where management can override controls and make estimates relying on judgments, which would maybe give rise to lower provisions, for instance. So what is the impact of this on the financial reporting? What is the impact of regulatory forbearances on the company's financial reporting of impairment numbers? How have you applied IFRS 9, for instance, IFRS 9 provisions through this? So if, for instance, loans were restructured, what were the conditions that were met? Because then you could see things like restructures coming up as a result of the impact of COVID. Then we look at going concern considerations. Companies need to explain to investors the effects that this COVID-19 has had on their business, and again, what are the sensitivities in the different scenarios? Some of these need to be explained. We know that it has created uncertainty, but then management needs to do a detailed analysis of the impact of this COVID on their business. Then we go on to the group auditors. You need to consider the circumstances and how the group audit is affected. In terms of review and supervision, how are you able to review and supervise when people are working remotely? We'll go on to the next slide. Key audit matters. ISA 701 revised introduced requirements to report key audit matters. FRC Rule 9 included other businesses other than listed companies in the reporting of CAMs. So how do these additional efforts that you need to make on the audit in terms of the numbers and estimates and judgments, how does it then lead you to report key audit matters on the financial statements? What are the areas that required more engagement time? In terms of the next point, that's subsequent events. The outbreak of COVID-19 was declared an international public health emergency in January 2020. So it's like a natural disaster under IAS 10. So it's a non-adjusting material event, but companies still must provide appropriate disclosures that reflect the nature of the impact of that event and the financial effects on the financial statements. Then forming an opinion, how do you then Is there a requirement, is there a need now to modify your opinion as a result of, say, scope restrictions, because you could not, say, for instance, attend the stock count, they couldn't stream it virtually, and perhaps at the time you're able to do a physical count, it's so long after the reporting date, and you're not able to get sufficient audit evidence. So perhaps you need to be looking at how that impacts the forming of your opinion. And then, of course, at the end of every audit, auditors always get written representations. You need to remember that at this time, there will be a lot more perhaps online or virtual documentation and things, and you need to consider that perhaps you need to get some representations of some of those electronic documents that you have received and you have satisfied yourself are reasonable and sufficient, appropriate evidence. And then finally, how does it affect your file assembly? You know that because people are working from remote locations and you perhaps have your audit team spread around and you don't have access to, and because of the lockdown, people are not able to travel, there are travel restrictions. So you actually have your audit working papers in the hands of perhaps different groups who are able to access the different sites or locations of the business that you're auditing. How do you put it all together in terms of assembling your audit file and putting your audit evidence in a secure, locked up space that supports the opinion that you have issued? So that is a quick overview in terms of the areas that global financial reporting councils all over the world and globally that people are thinking that the auditors are affected by. I'm sure that the subsequent speakers will go into greater detail on these matters. Thank you.
Okay. Thank you, Obioma, for that wonderful presentation. Participants, we are living in a period we call a new normal. Prior to this period, auditors, there are certain things you could do in terms of how you approach your clients, in terms of how you get your audit evidence, and in terms of the level of collaboration you enjoy with the clients. Also, just like she rightly said, in terms of what actually goes into the financial statements, it's very, very important for us to begin to think, how do we, deal with this new normal? How do we address the challenges that we are being faced currently in the event, in the light of the current pandemic we have? We also need to look at, the next topic we're going to be discussing will take us into these challenges in details. She has given us an overview of the challenges posed by COVID-19 on the audit of financial statements. We'll be moving forward to look at what are the specific challenges that auditors are faced with and how will they actually respond appropriately to these challenges to also be able to deliver on their responsibilities as auditors that issue opinion on the true and fairness of the financial statements. Without wasting any time, I want to welcome Williams Erimona to talk to us on the specific challenges that auditors are faced with in this current situation we're in. Thank you.
Thank you. Thank you, Chigozie, and also thank you, Obioma, for setting the scene with respect to the impact of audit on the financial statement. As you rightly pointed out, we'll go into specific details with respect to this issue. If someone could bring up my presentation up so that people can see.
I think you can go ahead and present.
Okay, all right. So first of all, I think from the presentation, when it comes up, I think I've dimensioned the issue into two categories. The first one is the impact on the audit firm.
Yeah, Benjamin,
and
you can share your screen.
The audit firm, the impact on the audit firm, it's first of all, your technology infrastructure. So, and this is very important even for our small, medium practitioners. It is clear, as you have said, Jikozie, that it's a new normal, and the way we'll be working going forward, it needs to be clear that the auditor is digitally fit. Of course, human resource management is also very critical. And also, what's important for the audit firm is their internal inspection process. What are the steps they are going to carry out and implement to ensure that audit quality is maintained, especially in this time where public trust and the public interest is heightened? It's also very important, compliance with regulatory guidance. As Obioma has rightly pointed out, the FRC has issued certain guidance both for the preparers of the financial statement and also for the auditors that audit these companies. Now, in terms of specifics, the second category is the impact on the audit engagement. So what I have here is, first of all, the practicalities of executing the audit and also practicalities of working remotely, doing this audit remotely. And I'll be touching on some key points relating to what happens with your interim reviews engagement, your observation of inventory, materiality, group audits, going concern, subsequent events, audit evidence, quality control, and fair value estimate. Is the screen up? Okay, let me go ahead. Now, for the interim financial statement.
Williams, you can share your screen. You can actually share your screen.
I'm using the mobile device.
Oh, okay, okay.
Yeah. So I think from a challenge, from a challenge perspective for interim financial statements, significant numbers of entities will be preparing their respective interim financial statements. Okay. And some of them, this will be their first time they are preparing interim financial statements in a COVID world era. And important aspects will be the measurement and recognition of asset liabilities, incomes and expenses. IS 34 becomes critical at this time. And as we know, for your interim financial statement, you are essentially giving an update to what has happened from what you signed off on the annual account. So your audit procedures that you have to be doing, they have to be an increase in the extent and nature of those audit procedures. And also, you would have to update your understanding of the entity and the controls environment due to COVID-19. And that could also impact on how you go about carrying these interim reviews. It's also very important that around these times, as ISA clearly noted, the involvement of what we call auditor experts, or in some firms we call them specialists, is very critical because you have to be making certain complex and which will require significant judgment. Your analytical and other review procedures would have to be precise in order to detect if there are issues with respect to the interim account presented by management. Yeah, as Obioma rightly pointed out, there will be challenges with the group audits. So the group engagement team, it is not business as usual. I think the first challenge is the components that you are reviewing. How sure are you they are not impacted by COVID-19? So you would have to clearly make sure that your risk assessment is more precise. And for those type of components, you would have to engage with them to understand how those audits will be carried out. Because as we are talking now, certain countries are still on perpetual lockdown, and that would be a very important issue for the group engagement team. Also very important is the communication with those that are charged with governance. Those charged with governance needs to be brought up to speed if there's going to be an impact with respect to the group audit opinion. Also very important, as Obioma noted, is inventory observation. As the ISAs clearly noted, these are specific procedures we are required to perform when inventory is deemed or is considered material by the auditor. So the question now becomes, do we have an impracticable situation? If the auditor have assessed it, yes, that there's an impracticable situation like we have currently, then alternative procedures that will provide sufficient and appropriate audit evidence will seriously need to be considered. So things like using technology, video remote technology, photographs will be very important, and maybe used in conjunction with inspecting documentation relating to the purchase and sales of selected inventory item, the use of internal auditors, and also performing analytical procedures will be very critical. After all this is done, it's also very important that consultation comes into form. in order for you to make the right decision if the evidence you have obtained from these alternative means are sufficient enough for you to issue a clean opinion. The other very important point is materiality. Materiality, as Obioma noted, is very, very critical. And the challenge there is, it's first of all, you're planning materiality. Because the metrics you are using currently, for example, for a profit entity, your profit before tax from continuing operations will be what you use by default. But because of the volatility of what has happened to the financial performance of businesses, you would need to clearly consider if you need to change your metrics to something else that is not volatile. Also very important is users of the financial statement will be paying very close attention to liquidity and solvency. And how does this come into play in assessing your materiality? Also very important for audits that are ongoing is the change in circumstances that is due to the impact of COVID-19. This change in circumstances definitely will trigger revision of materiality, and you have to evaluate both the qualitative and qualitative factors. Also very important is your aggregation risk, because at the end of the day, you need to determine your performance materiality. And this is also very important in making sure you make the right decision. Risk assessment, and from a risk assessment perspective, you will need to clearly assess if your significant risks you've identified pre-COVID is still relevant, because some non-significant risks may now become significant. Your ROM assessment, which is your risk or material misstatement, you also need to evaluate it. And you also have to evaluate it in the context of the elements of the financial statement. We should clearly know that in this post-COVID world, it may be difficult for you to entirely rely on a controls approach because you are not in the client side, and that may become very, very difficult. And the people that normally perform these controls are also at home. And therefore, you may need to do more of substantive testing. And also, there could be increase in the number of control deficiencies identified. And the last but not the least is the fraud risk. It is very, very critical at this time that we carefully consider fraud risk, especially fraud risks from revenue. We should not just go by default in reporting fraud risk from revenue, as is critical now because a lot of people are under pressure to report some revenues because of the impact on valuation and other purposes that the users of the financial statement may require. Also key is the audit evidence, because now we are moving to a situation where the audit evidence are going to be digital form. This is very, very different from what we do pre-COVID. Now you are going to rely on a lot of scanned documents and all sorts. Definitely, the ISAF clearly requires the auditor to consider the nature and the reliability and the sources of this information before you rely on it. So for example, where is this scanned copies coming from? So a bit of inquiry and a bit of a test check, maybe doing a visual feed to understand how they are getting this document converted into a digitized form is very, very important. Also, you will need to check the metadata of this electronic information in order to corroborate what the client is telling you compared to the documents they have provided. Also very important at this time is our circularizations, like debtors circularizations, confirmation response may be delayed, and you may need to close out on the audit. The standards definitely allows us to consider alternative procedure, and all this may be required. And overall, for audit evidence, you may have certain situations where you may actually require additional time in order to fulfill your requirements as an auditor. Quality control is very, very critical. It comes from the supervision of your teams that are working remotely, which is a very different ballgame, because normally we go on site to do this audit and everybody is working from separate locations. So what we expect auditors to do is to ensure to address this challenge, hold planning calls, make sure you schedule regular check-in using maybe Skype or any form of technology that you have in your firms. Telephone calls is also very important to share status update, to understand where the works, where the status of the audit is, and also the challenges being faced by your team. Also very important is to use a screen sharing technology to provide direction and also achieve an efficient review process. Also very important, I need to stress, you would need to communicate and communicate at this time. Communication is critical and it has to be proactive, concise, and it has to be with respect to the significant matters facing you as an auditor. Also very important is communication with those charged with governance. The standards actually requires us to make sure a two-way effective communication is maintained. And with this COVID-19 outbreak affecting businesses, volatility in capital markets, and of course, significant impact in the financial statements of companies, it's very, very important we proactively discuss matters with those charged with governance, ensure communication of key matters related to scope and timing of the audits, and maybe new accounting policies management has brought out during this COVID era. Do they make sense? Are they reasonable? So those type of communication will need to be done. Of course, if there's going to be an impact on the audit reports, this upfront communication is also required for the audit committee to be able to make a decision related to those matters. And any other significant matter that is affecting you as an auditor during the audit process is also very key that we make mention of it. Subsequent events, as Obioma has said, I won't go much into details again. It's very, very important we evaluate the appropriateness of the disclosure and also clearly check when management says something is non-adjusting. Are we really sure? We need to challenge management's judgment and to clearly articulate and also challenge them to provide clear evidence why it is a non-adjusting event or why a matter is an adjusting event. Overall, we need to ensure that we have complied with the requirements of IS 10 with respect to subsequent events. Going concern has become a very, very key matter, and I won't be surprised that a lot of audit reports, especially for businesses in certain sectors, may have to carry at the minimum emphasis of matter. So matters such as we evaluating the appropriateness of management use of going concern assumption is very critical. Also checking management's mitigating factors they have put forward, such as maybe refinancing arrangements, cash flow forecast, and all those things we need to be stress test. And we need to make sure our professional skepticism is heightened at this time in order to ensure that we provide and give assurance to the right numbers. Also, you may need to consult. Consultation may be key because of the significant judgments relating to going concern. Very important is your audit reports. It's very, very clear now, your audit reports may not necessarily be clean if you have, for example, going concern issues, because operationally, most of these businesses are challenged, especially in certain sectors where they are reporting zero revenues. So it's going to be very difficult to say that you have a clean audit report. So you will need to clearly check that your audit report at the end of the day gives a true and fair view of the financial performance and financial position of the business. Estimates is also very important. You will need to challenge management estimates going from receivables to impairment of non-financial assets. So from an audit perspective, you will need to clearly look for contradictory and inconsistent evidence. And you need to clearly do a lot of documentation and challenging management assumptions relating to significant assumptions they have used. So your ECL model, for example, in IFRS 9, your value use model, all those type of things, you will need to critically assess it. Because of course, management may be optimistic with respect to this valuation. And you will need to ensure that they correctly reflect the circumstances at the date of measurement. The use of specialists is also critical at these times because the issues could be complex relating to them. The second section is those challenges executing the audits, barriers to obtaining information. Those are key issues. Difficulty in accessing client premises, as I've mentioned, and audit procedures not providing anticipated audit evidence are some of them. There's also significant challenges in completion of audits of components and even audits of standalone entities. And additional audit work may be required in order to have those audits concluded. I think from my view, the audit readiness in the COVID-19 world will require you to use a secured cloud sharing platform There are a lot of examples out there. For us, we use the collaboration site. The use of data and analytics will be very, very key. Increased investment in technology is a no-brainer. You would have to do that. You have to start considering the use of electronic signatures in your contract documents and in signing your engagement letter, and the governance structure that you need to put in place so that those electronic signatures do not get to the wrong hands. Of course, virtual meetings have become critical, and we know the SEC has issued guidelines. The Nigerian Stock Exchange has also issued guidelines relating to conducting virtual meetings. Also very important is how you plan for your inventory count and how you collaborate with the auditors. So those are the key challenges from my own perspective and what the auditors will be required to do. Thank you.
Thank you very much, Williams, for that excellent presentation. Colleagues, we are faced with a new normal, and audits now requires thinking outside the box, asking specific questions on how do I respond to the challenges I'm faced with today as auditors. He has actually spoken specifically, on the challenges we're facing. He talked about the audit evidence, circularization. I know prior to this period, at times we insist on documents that are manually signed. But today you cannot go to client's office because, there are restrictions. And again, the health and well-being of our staff is also very, very important. And we do not want to expose any of our staff to this pandemic. So working virtually and sharing documents electronically has become the order of the day. And so we need to then brace up. And for auditors, we also need to step up for those that do not have adequate infrastructures that will support remote working operations. The time has come for us to then have to start thinking, increase our budget in the area of IT infrastructures and also upskill our staff in that aspect of our business. All right, moving forward, we also want to look at the last paper for today, which will be presented by Benjamin Ehenomia. He will be talking to us on fraud risk and other disclosures. But before I hand over to him, I also want to state that we have opportunities to ask questions. Just drop your questions, at the Q&A section of the slide, and we will make efforts to respond to those questions at the end of the presentation. Thank you. Benjamin, please.
Okay, thank you, Mr. Chigozie, and thank you for the very brief introduction. I want to also appreciate Williams for a wonderful presentation, and my colleagues from Pricewaterhouse. So I'm trying to share my screen now. Okay, so I'm talking on fraud risks and other disclosure requirements. And just like I said before, the last two speakers have spoken extensively on what I intend to share in this section. So all I have to do is to leverage on the existing knowledge that have been shared from the last speakers, as well as the other series of webinars that have been held by the great institutes prior to this moment or period. So this is a quote from 40 chief executives who are members of Fortune CEO initiative. And what they are saying is the reality that we won't return to the old normal ever, because a lot of things have changed as a result of the COVID-19 pandemic. So in looking at this topic, I want to look at COVID-19 and fraud risks. And then while discussing disclosures, I'll be looking at the audit of disclosures from the aspect of subsequent events. And I'll be talking about going concern consideration. I know that the last two speakers have actually dwelt more on going concern consideration, but just to look at it again. And then I look at subsequent event and audit reporting, just to elucidate also on what have been said before. And then we can recap and then provide opportunities for questions. So when we talk about COVID-19, it has actually changed the way we interact with one another as individuals due to social distancing, as well as how organizations interact with one another. Also, replete in this change is the fact that it has changed how we auditors associate with our clients. It has provided a new way of working. So remote working or working from home is now a new normal. And it has created a lot of anxiety. In the first instance, it has created a lot of opportunities in addition to that. And also, it has created a lot of unthinkable situations which have led, or which is leading, or which have led to change of mindset in individuals, change of mindset in organization, and change of mindset just generally. So every common man on the street simply sees the impact of COVID-19. So in relation to fraud, I can say that COVID-19 have brought about new related fraud, scams, and also built fraud scams on existing fraud using COVID-19 as an avenue to dupe or to, in a way, try and extract unfavorable situation from clients and individuals. So what we are saying in this slide now is that COVID-19 is a field day for fraud, because you see that many fraud controls are diminished because people are working from home. So most organizations focus more on essential services clients. So you see certain departments that have so many people within their internal control unit or department, such that so many of them are not, functioning because of the capacity that the constraint in most of these organizations to ensure the effectiveness of the robustness of their internal control system. Also, you could see that worldwide data security is challenged because a lot of companies are really creating time just to respond to COVID-19. And also, you could see that millions are actually stuck at home because of COVID-19, and it creates a lot of worries in terms of how am I sure of my job security, and how am I sure of the next meal? How am I sure of how my organization is really going to grow in the foreseeable future? So these worries for individuals have created avenues for criminals to perpetrate their fraudulent activities as they seek for information, and they use that information to dupe not just individuals, but organizations. So you see the case of email phishing, the case of requesting for sensitive information by fraudsters, either through SMS or through emails soliciting for one sort of support or one sort of kind of assistance. So these have actually heightened and elevated fraud risk factors in the world that we live presently. So in order to summarize the impact, it is very important, it is very vital that we consider the fraud triangle in relation to COVID-19. So in looking at this fraud triangle, we are saying that fraud risk is a function or is driven by three components. Now, in this present situation, we have, within the fraud risks triangle, we have incentive and pressures. And this is coming in because employees, they are afraid of unemployment for themselves and family members, as well as the consequence of this. So that, in a way, have created incentive and is putting pressure on them to take fraud as a new way of life. So that have heightened the risks or fraud risks. Also for opportunities, employers are not monitored currently. Why? Because most of them are working at home. So that effective monitoring oversight is not there. So it could create an opportunity for these employees to use other means to get unusual benefit or to perform unethical practices within the organization. That again is a fraud risk factor that heightens fraud risk factors. And then we talk about the rationalization. So within this rationalization, yes, employees are always, or we want to give justification for performing unethical services. And the justification will most likely be, that is how I can support my family. So that again goes to the organizations, because pressures will be on the the executive of the company to report good earnings so that dividends are being paid. And some of these organizations pay incentive that is driven by certain key performance indicators, such as revenue and profitability. So that will put pressure for this executive in this organization to want to overstate revenues, to want to overstate profits, or to present the financial statement that does not fairly represent the state, the position of the entity, as well as the performance of the company for that point in time. So because of the heightened and elevated risks, we are looking at a situation of the control environment, and that is really very critical in terms of reassessing. We need to ask ourselves the question as auditors: how has this control environment been able to detect, to prevent and detect fraud within the organization? So in that case, we are now looking at the risks of material misstatement resulting from fraud. So I look at fraud coming in two categories. We have internal fraud, external fraud. That's very similar. For internal fraud, we are looking at a situation where it is individuals within the organization that perpetuate such fraudulent activities. Just like I shared in the last slide, we talk about the incentive, we talk about the opportunity, we talk about rationalization. So if we look at that, for internal fraud is basically classified into three: that is related to financial statement fraud, that is related to asset misappropriation, and that is related to corruption. While external fraud fraud talks to third parties that are customers or vendors that commit fraud against an organization. So really what I want us to look at most importantly, and the key takeaway here is, because of the impact of COVID-19, fraud risk is elevated. And as auditors, we really need to be asking key questions about the control environment of the entity. We have to be asking key questions about management overrides of control. And management override of control, we need to be asking key questions in terms of assessing whether fictitious assets or transactions are being recorded in the business or in the financial statement of the organization. And Williams have actually spoken more on this in terms of At what point are you recognizing assets? What point are you recognizing liability? Am I having sufficient appropriate evidence to justify the carrying amount that in my financial statement or in the client's financial statement? Also, we consider management override of control in areas of establishing or reversing reserve just for the purpose of manipulating results. Assessment of going concern ability of entity is another thing. Is it a fair assessment? Are we saying that the entity can continue as a going concern in the foreseeable future? So what are the evidence that we have on file to be able to make or agree with management assessment of going concern? I'm going to talk to that later. Also, situation of altering records and terms related to significant and unusual transaction. Electronic signature on contract and sharing of electronic document is closely associated to this. So we need to confirm the reliability of the audit evidence, just as Williams has actually emphasized. How are we sure that this point of evidence, this piece of evidence that is provided by the company is right? How can we vouch to that authenticity? Is it an evidence that we can rely on? Also, there could be creating accounting in terms of pushing costs forward, deferring revenue to a later period so as to get the benefit within the COVID-19 period, and also altering the presentation of the financial statement. So while we audit our client, it is very, very important we exercise professional skepticism in the area of fraud risks, because fraud risks has actually been heightened based on COVID-19 pandemic. Now, in the second aspect, I want to talk about subsequent events in terms of disclosures. Disclosures are really very, very key, and we are in this at this very point in time because for subsequent events, we consider two factors: those that are adjusting events and those that are not adjusting events. Okay, so in this consideration, it is very important for us to know where we are coming from. So as to determine whether to adjust or not to adjust and what really is the difference. In December 2019, a pneumonia-like case was identified in Wuhan, China. 31st December 2019, China alerted WHO of coronavirus. 31st January 2020, WHO declared the outbreak a public health emergency international concern. 8th of March 2020, the Prime Minister of Italy quarantined northern Italy. On 11th of March 2020, WHO declared the outbreak to be a pandemic. Thereafter, on the 13th of March 2020, several countries began to impose restriction on traveling, gatherings, schools were closed, restaurants were closed, places of worship were closed, and these were mandatory. So now when we look at, and thereafter, the Financial Reporting Council of Nigeria issued a statement in terms of what are the key considerations for the audit of 31st December 2019 year ends. And so the scenario that we are talking to today is around the practicalities of the audit work that auditors will perform on concluding on the required disclosure for IAS 10 for a non-adjusting event arising from COVID-19. So Here we have to take a recap of what really are the non-adjusting events. So non-adjusting events are events that do not require adjustments to the numbers in the financial statement. Okay? So non-adjusting events do not need to be disclosed. Non-adjusting events need to be disclosed. However, if non-disclosure could affect the economic decisions made on the AFS, or the financial statement, what I'm saying here is, it is very important that these, if impact, they are disclosed. And because if they are not disclosed, it could affect the economic decisions that are made on the financial statements. So this disclosure, what are really these disclosure? And in this disclosure, the first consideration is to look at what are the nature of the events, and possibly what are the estimates of the financial effect of this nature. And also, where it is not possible for the estimate to be clearly disclosed, what do we do in terms of that disclosure to the financial statement? So that is what we are looking at when we try to examine the non-adjusting subsequent events. So in looking at this, we are now looking at a brief outline of the thought process that we are talking about today. And we are saying, what should the auditor do in this assessment? That first, the auditor should consider performing a risk assessment of what the possible drivers of the impact is that management needs to consider. It is very important because the key is that it will allow the auditor to properly evaluate management assessments of the impact of the subsequent events. And then the auditor is expected to obtain management process and assess it for completeness. And we do that based on information we have obtained based on the understanding of our business in order to assess if these are reasonable or not. And then it is important, where qualitative disclosures are made, that we look at the assumptions that are driving such qualitative calculation in order to confirm whether they are reasonable or not. So once we are able to have a view on what is likely to be disclosed by management, we then consider IS 10 and IS 1, bearing in mind that financial statements are prepared based on fair presentation. So what I want to say in this process is that it requires judgment throughout the process. And so we have to exercise a lot of judgment in arriving at this. So the next slide is talking about the risk assessment. So, and in looking at the risk assessment, we are saying that the risks that are related to non-adjusting subsequent events are whether the disclosures are complete of the material events and their related impacts. So it's not just making a disclosure, but the key question is, are the disclosures complete? And are their impact well disclosed in the financial statement? And secondly, we consider whether the disclosure include an estimate of the financial effect is complete and is reasonable. So these are the key considerations. Why considering that? We have to consider both internal and external factors of the business environment of the client. And for auditors, we say it is the understanding of the business. And there we start looking at the business operations. There is lockdown, shutdown of operations. So what is the impact on manufacturing and delivering? What is the impact of no employees or employees becoming ill or employee costs versus retrenchment? How long is this going to take? Will it still will the business model still change beyond the lockdown period? Then we look at the geography. Different countries do not have the same impact of coronavirus, and we may be auditing clients that cut across the boundaries of Nigeria. So it's very important that we consider the impact for different countries. We consider business operations. We consider where the customers are. We consider whether the client have a full appreciation of the impact in different countries, because the uncertainty is not the same for each country. In terms of funding and cash flow, key consideration in making disclosure is to determine cash outflow and cash inflow. Is outflow greater than inflow due to lockdown? And the entity is, and because the entity is not able to make sales based on the nature of the entity and the nature of the entity's business? Are there extended impact for debtors in terms of delay in payment terms, such that we say cash received may potentially be delayed after the lockdown is lifted and when business resumes? Does the company also have sufficient funds to meet its financial obligation? And these we're going to be looking at in going concern assessment also. And then we look at supply chain in terms of product, part, and equipment that may be delayed and may impact manufacturing and supply of goods and services. Also, with supply and demand, there could be changes in volumes. There could be substitute and alternative products. There could be impact that could impact on what? On forecast, as well as support and valuation of assets. So we need to be conscious of that also in identifying the risk factor that will support our disclosure in the risk assessment phase. Laws and regulations are actually changing. So we look at laws that will restrict movement, lockdown, or impact on business operations. And we're looking at politics to play a very fundamental part here in terms of policies to provide financial assistance to businesses and individuals. Of course, we could look at what CBN is actually doing most recently. And then we are looking at economic down, recession, impact on GDP, discount rates, and what have you for the purpose of valuation of assets. So these are really key considerations that as auditors, we need to see management doing. So I have emphasized so much on this in the previous slides. So for the purpose of time, I don't want to talk so much on this, but I actually want to pick one. Just like the fat tax asset, we are saying, is there an update in profit forecast? Because profit forecast pre-COVID pandemic period is expected or may be different from what the position is as of today and possibly or potentially in the future. So these are really some of the key considerations that we expect to look at the risk assessment phase. So in terms of management procedure, and the way I'll go and look at this is by answering the question, what are the possible ways to assess the financial effect of subsequent events? I have listed 4 items here. The list may not be exhaustive. So we are looking at accounts in the financial statements. So we are saying that management is required to do a line-by-line assessment of the balance sheet item. It's really very, very key. And in that, we can check for the note for disclosed assumptions and judgments. Also, we look at activities that are based on cash flow statements, operating, financing, investing activity, cash inflow versus cash outflow, sustainability of the business. We expect management to look at geographical location because the impact for each country is different. And also, this entity may have several clients that are spread around the globe. And demand versus supply, import versus export based on restriction of flights and some other restrictions that have been placed in place, as well as segment, business or product line. It's very important that we look at that also. And so the key thing here is, in our review as auditors, we should really understand the client and the client business. So moving closer to the subsequent event disclosure, we look at IAS 10, we are saying that the key consideration here is whether the information will be necessary to enable the user of financial decision and user of financial statement make decision. And would an incorrect economic decision be made if the disclosure is not made at all? And will the financial statement be false or misleading without the disclosure? Of course, failing to make disclosure in the financial statement may potentially have implication for the audit report. So what we are saying here is, for the nature of events, an estimate of the financial effect or statement that such an estimate cannot be made. So that we provide disclosure. Management is expected to provide disclosures that are necessary for decision making. So for IS1 also, other considerations exist. And so we have to look at, because ISS1 requires that significant estimate and judgment need to be disclosed, because it will provide useful information to users in making economic decision. So in this case, what will be done will be to update note with forward-looking information, inputs, and estimate, as well as the assumptions that are driving the estimates. So consider, when is disclosure appropriate? So what you could see is the extent of the impact and the extent of the disclosure and audit efforts. We are saying they are both related. So the more the impact, the more the disclosure that is likely to be made. And of course, what guides that is the reliability of the evidence of the impact. So that means we have to, like I said before, assess the impact on our clients and the kind of business that our client is engaged in. So another consideration is to answer the question, does the financial effect have to be quantified in the financial statement? And so what we are looking at here is just, like I said before, the reliability of evidence and the potential for change, and how important are they to the users of financial statements. So if the event cannot be quantified, then it could just be a qualitative disclosure. And so we have to, there are instances where disclosures can be done in ranges for quantitative disclosure, but then we have to actually look at that assumption and auditors to be sure that those assumptions make sense, and then also consider how material the effects really are. Okay, so then how much audit work is required? And in all, we simply talk about the ability to obtain sufficient appropriate audit evidence There shouldn't be contradictory evidence. As auditor, we are expected to recalculate. We're expected to ensure that we are using the right information. We're expected to ensure that the assumption and judgment are reasonable, as well as the reasonability of sensitivity and scenario. Okay, so then the other bit has to do with going concern, uncertainty. What is the relationship between that and subsequent event disclosure? Now, it is simple. If it doesn't lead, the condition do not lead to material uncertainty related to going concern, then it's good just for us to disclose in the event, after the subsequent event, the impact of going concern. However, if it leads to material uncertainty related to going concern, then we should be looking at the impact in the audit report. So I now quickly look at going concern consideration. And going concern consideration, the standard requires that management shall make an assessment of an entity's ability to continue as a going concern. So that we give scenario for three things. But in this case, financial statements are to be prepared on a going concern basis. So where they are not prepared on a going concern basis, we are saying that management intends to liquidate the entity or for the entity cease trading or alternative. Or also, we are talking about a situation that could lead to material uncertainty related to going concern. So, but what is key here is that ISA 570 requires that management to make assessments of going concern 12 months from the reporting period. So subsequent events and non-future impact that are identified up to the release of the financial statement are what should be included in the going concern assessment. So the auditor is expected to just give attention to this non-concern. And what are these non-concern? We are really talking of the entity. Is there a certainty over the ability of the entity to meet its obligation over the foreseeable future? And so it's almost the same decision tree here in terms of the uncertainty. And we are saying that if there is strained evidence that shows that current conditions we are not being able to settle obligation or to return to normal in subsequent events. But when there is a severe strain with concern on the business purpose or the ability of the entity to operate normally, then is a going concern consideration. So in terms of going concern, we consider three things here. First, we consider whether owner decides to liquidate or we have no realistic alternative to do so. In this case, it is not a going concern. We are not talking about going concern uncertainty here. However, in the second bucket, when we start looking at cash flows, liquidity, and ability to meet financial obligation, we are looking at source of financing, overdraft activity, ability for the holding company to support, loan repayment and challenges, covenant breach, and what have you. We are now asking the question, is there a material concern that is arising that the obligation cannot be met? Most likely due to COVID. In that case, we should be considering mitigating factor. So where mitigating factor do not exist, or they are not there, or they are there, but they do not mitigate the uncertainty that is related to the going concern, then it has to be a going concern disclosure. So in terms of subsequent reports, just we use this decision tree. COVID-19 impact disclosure. Does it impact disclosure? If the answer is yes, then we are going to be looking at disclosures that are related to IAS 10 and IAS 1, whether they are compliant or not. So if they are compliant, we consider disclosing whether there's material uncertainty that is related to going concern. So, and if there's material related uncertainty related to going concern, then consideration will be made to include a paragraph of material uncertainty related to going concern in the audit report. However, if it does not infer that a material uncertainty related to going concern is the case here, then we further ask the question whether is the disclosure of such importance such that it is fundamental to the user's understanding of the financial statement. If it is yes, then there will be an emphasis of matter in the audit report. If it is no, then there is no impact on the audit report. However, if we look at a situation whereby we say COVID-19 does not have any impact, then we should be looking at, if it is no, then we should be looking at IFRS non-compliance. And we assess disclosure, whether there is disclosure misstatement and audit opinion impacts. So that is just the decision tree that talks to how we go about the disclosure. So just to lay emphasis a little on the emphasis of matter, and what we are saying here is that if the auditor consider it necessary to draw users' attention to a matter presented or disclosed in the financial statement, that in the auditor's judgment is of such importance that it is fundamental to the user's understanding of the financial statement, the auditor will include an audit of matter in the auditor's reports. So the key consideration of including an emphasis of matter is a consideration whether the matter is fundamental to the user's understanding of the financial statement. And that brings me to the next slide as I round up to answer the question, do we mean by saying that it is fundamental to the user's understanding of the financial statement? And we are saying that users will not be able to understand the financial statement if it is not read with the disclosure. If we are saying that the disclosure affects the foundation and core of the business fundamentally, if we are saying that if it is not emphasized, the user will make the wrong decision based on the financial statement. If we are saying that the disclosure gives context on how to read the financial statement, we say that it is fundamental to the users of the financial statement. So I will end up by saying that we are really in an unprecedented time that is brought about by what the world never expected. And of course, it is affecting businesses, it's affecting our way of life, and it is touching virtually on everything. So thank you so much for giving me the opportunity to make this.
All right, thank you very much, Benjamin, for that detailed and wonderful presentation. Participants, I want to believe you have learned so much, and it's very important for us to put into practice what we're learning today. We are not conversant with the current situation. It's a new normal, which we are all learning to cope with. We have quite a number of questions here. I will try as much as possible within the time we have to respond to these questions. So the first one is, Obioma, this is directed to you. In reviewing credits availed to customer during pandemic, what are the possible risks expected and how can these be mitigated? Okay, it appears she's having technical issues.
No,
all right. It's not, okay, fine. In reviewing credit availed to customers during pandemic, what are the possible risks expected? Now, when you're giving credit to customers, there are certain things you need to consider. You also need to put into consideration the ability of the customer to pay. You need to look at the sources of inflow that the customer may have presented to you, as ways by which the credits will be paid off. You also need to look at if there are some projections that have been done, before this period. That has to be considered. You look at the factors considered in that. Look at the assumptions made to be sure that it's also feasible in the light of what we have, the current situation we have today. Benjamin, this question is for you.
Okay.
Most of audit evidence are scanned. These are prone to manipulation, by management. In other words, today, because we work remotely and clients stay at their own end and share documents with us electronically, so we are not able to review these documents. So the question is, how do we detect if these documents, which we want to place reliance on in forming our opinion, whether they have been manipulated by management, and if they are, how can we detect that and how can this be mitigated?
Okay. So I'm not sure I've been unmuted. I'm trying to unmute.
I can hear you.
Oh, okay, so fine. Okay, so the question is on sufficient appropriate audit evidence in terms of providing scanned documents.
Yeah.
Now, there are ways that we can go about that. We have third-party confirmation. If it is invoices where we have to perform subsequent, we have to perform, if it is, for instance, if it's trade receivable, we're expected to perform subsequent events after the year end, which is an alternative procedure that we give assurance or evidence that that amount existed and payment have been made after the year ends. Aside from that, for bank confirmation and banks, also, so what you do in an instance where you get a scanned document from clients or confirmation from the bank is to do a call-up procedure, confirm that these people work in the bank, and do a documentation as part of that piece of evidence that have been obtained of the procedures that was carried on by making a call to the bank representative, telling them to confirm that this information is coming from the bank. And so that is just the best that one can do in situations like that.
Okay, thank you. And it's also important to note that, there is what we call corroborative inquiry. At times when you receive audit evidence, you also need to look at the evidence you have obtained prior to this period. You corroborate, if management has fraudulent tendencies and they want to misrepresent facts. So as auditor, you also need to wear your thinking cap, and that's where professional skepticism comes in. You need to look at that evidence. Even though it's scanned, you also need to evaluate it, look at the attributes of that evidence. Look at other evidence you've obtained prior to this period, and you corroborate. In the process, you're able to find out if what they have given to you is actually correct or not. Again, yeah, I said that. Then also need to probably third-party confirmation, third-party evidence you have obtained will also help in addressing that point. Okay, thank you. William's question for you. Now we are in a period where movement is very, very difficult. There is restriction in movement. And one of the audit procedures required to obtain sufficient audit evidence regarding inventory is physical verification. Okay, with the new normal we are in, it's difficult for auditors to visit the client's sites or location where the inventories are kept. So the question is, as an auditor, how will you obtain this evidence that you require to form an opinion on the existence of inventory, given the fact that inventory is significant to the financial statement? Can you unmute, please? Unmute. Yeah,
thanks.
great, thanks.
It's a very important question, especially in certain sectors where inventory is material. As you rightly pointed out, when it's in material, you're actually required to perform, observe an inventory count. Now, when that issue occurs, what you can do is evaluate which other alternative procedures are available, especially where management is conducting the count. So a very, very good one that I've seen people use in practice is video technology. You do a remote observation of those inventory, and you get whatever type of audit evidence you need in terms of the quantity. Of course, you could support this also with use of internal audits, the internal auditor, if the organization you are auditing have a very strong internal audit function, and also some bit of testing or the use of roll forward procedure. So there are available alternative procedures available in the ISAs for you to still get sufficient and appropriate evidence to conclude about the existence and condition of inventory.
All right, thank you. Okay, talking about internal audits, it's seen that internal auditors are the gatekeepers. Benjamin, this question is for you. As a gatekeepers living in a new normal, what do you suggest that, or what are your views about the new responsibilities of internal auditors to actually still, ensure that the operations of the company are carried out in line with the laid down procedures? Yeah, let me just provide a background to that. Today, you discover, just like we said at the beginning, that prior to this new normal, organizations have set targets. Prior to this new normal, stakeholders had given more like targets and performance expectations to the business managers. And because their KPI is actually tied to their performance or delivery of the targets that have been set, so there are tendencies, there are risks that these business managers will then engage in schemes, fraudulent schemes, to make sure that the numbers are delivered. So as the internal auditor, because the audience we have today is a mix of both internal auditors and external auditors. So they want to know, as internal auditors, what should they be looking at, and ensuring that they also deliver their own part of the obligation.
Okay, so for the internal auditor, is very key for them to look at really what have changed within the control environment in the entity. Because the new way of work suggests that it could be a situation whereby they don't have access to most of these transactions records. And also, you may have fewer individuals that are performing more responsibilities due to limitation within an organization. I know of some organizations that are not using laptops. Internal function is built essentially on desktop system, and they can't take resources like this out of the system. So I think what we should be looking at is, or they should be looking at, is what has really changed in terms of the process flow within the organization in relation to internal audit and internal control. And then what do they have, or what can they do to cover that bridge? For instance, if we have a situation where there was segregation of incompatible duties before, and presently such do not exist because of the limitations that are inherent, that again is a breach of control. And it is what the internal auditor should be looking at in terms of what is the intent, what is the purpose. So why are we, or why is the, what is the intended, what is likely going to come, out of the situations. So they should focus more on looking at what is the unusual norm. And in looking at that, what is the consequence of that action or inaction that is brought about by process change? Thank you.
All right, thank you very much. There are other questions. Let me just, I want to believe that some of the questions we've asked have been answered by the paper presenters in the course of making their presentation. But on the general notes, it's important there are questions bordering on what should small audit firms or medium-sized audit firms be doing under this situation, because they have not, prior to this period, scaled up to the point of dealing with remote working operations. My response to that is that we don't have any other option but to scale up. It's very, very important. It has become very clear that there are no other ways of dealing with the current situation other than scaling up and making sure that the right infrastructures are in place, for our team to work with. There are also questions on how do we deal with closeout meetings. Same way, there are tools. We have Zoom, we have Skype, we have Microsoft Teams that can be used to deal with closeout meetings, discussions with clients, progress meetings with clients. These are tools that are being deployed now. So it's time for firms, small firms and medium-sized firms to begin to look in that direction. How is my IT infrastructure? How am I positioned to deal with the current situation? Do I want to remain in business? If yes, then I need to face the current situation and make sure that I also survive and be in a position to provide service to my client. I also want to say here that the slides will be shared with us. I know William's slide was not presented, but he did justice to the topic. So we will share the slides, with every participant at the end of this presentation. This is 11:30, and all our questions also directed to ICAN, they will respond appropriately. For example, there is a question on what is ICAN doing in terms of training practitioners, to deal with the current current situation we're faced with. This webinar that we're doing today is part of those initiatives, and I'm sure ICAN has other webinars, lined up to address specific issues that may have arisen from this COVID-19. So I know we're all business people, very busy, and I do not want to go beyond the time that I've allocated to this presentation or this webinar. I want to say thank you very much. Should you require further clarification based on the presentations made, you could send a mail to ICAN using the link you are provided, and they will get across to us. We'll provide adequate response that will be shared with you. And I want to also encourage you to look out for notifications on webinars that will be organized by the Institute. Hot topics are being treated, and these are relevant in a time like this. I want to wish you well, stay safe, and make sure that you remain relevant by upskilling yourself and also upskilling your staff to cope with the current normal. Thank you, and do have a great day.
Okay. Thank you.